Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Let's take a look at where we finished the week. On Friday, global equities mostly higher as investors digested US data which showed consumer spending increased solidly in July, supporting the view that the Fed won't see the necessity to cut rates aggressively. On Wall Street, the Dow reached a second consecutive record closing high, while big tech stocks led the Nasdaq and S&P higher. And for the month, the S&P rose 2.3%, the Dow added 1.8%, and the Nasdaq climbed just over 0.5%. And among the Mag 7 stocks, Amazon and Tesla rallied to end the week. Nvidia rebounded from a 6.5% drop on Thursday after the AI chipmaker failed to match investor expectations despite upbeat results. Broadcom finished higher, while Marvell Technology surged after the chipmaker forecast quarterly results above estimates. And Intel shares jumped following a report it was exploring options that could include a merger. Dell advanced after lifting its annual revenue and profit forecast. And elsewhere, Novavax shares surged after the US Food and Drug Administration granted emergency use authorization for an updated version of its COVID vaccine. And Ulta Beauty slid after trimming its annual results forecast, citing slowing demand for higher priced cosmetics. Well, US consumer spending increased 0.5% in July, which was in line with economists' forecasts. On the inflation front, the Personal Consumption Expenditures Price Index, which is the Fed's preferred measure of inflation, rose 0.2%, which was also in line with forecasts, taking the annual rate to 2.5%. Excluding food and energy, the annual core price index rose 2.6%, matching the previous month's rate. And the data reinforced the likelihood that the Fed will likely opt for a small rate cut at this month's meeting, which saw US Treasury yields rise, the 10-year snapping 2-week streak of declines to be up at 3.9%, while the 2-year was at 3.92%. And the US dollar gained on Friday following the inflation data, but the greenback was down around 2.5% for August, falling for a second straight month against the Japanese currency. The Aussie is lower at 67.6 US cents. All right, let's get across what is moving on global markets. Greg Smith joining us from Devon Funds Management out of Auckland. Greg, good to catch up with you again on a Monday morning as we look ahead to the week. Of course, I guess locally at least, we're looking back at reporting season now done, just getting a couple of stragglers coming through. But we'll get to that in just a moment. Overall, how are you seeing global markets at the moment? Because seasonally, September tends to be quite weak.
Yeah, that's right, it does. But interesting, just sort of reflecting on August as well. We started off with effectively a panic attack at the start of the month. And you look at, as you point out, the US markets, and a lot of markets end up having a pretty good month. S&P 500 at its fourth winning month in a row. And I think a lot of that stems back to the fact, and you mentioned the Fed meeting that we've got coming up. They pretty much made the point that as long as the data plays ball, that they'll be easing rates this month. And it appears to be playing ball. You look at those inflation numbers, their preferred inflation gauge on Friday. We look to be gliding to a soft economic landing in the world's largest economy, the Atlanta Fed as well. They upgraded their real-time GDP growth tracker to 2.5%. It was 2% just a week ago. A lot of the data is quite encouraging. We saw the University of Michigan survey. Consumer inflation outlook is the lowest since 2020. So I think that's all sort of heading in the right direction. Yes, September can be a challenging month, but the reality of, and remember, the reason we got that sort of panic attack at the start of August was concerns that rate cuts would come too quick, too slow, should I say, or too late to avoid a hard landing. And that obviously fear appears to have dissipated. And I think the reality of when they actually come, so we're looking at the week after next, it might provide a bit of an impetus in a typically tricky month. We've got some other factors there. So we've got an election coming up as well. So that might add to things. Obviously, a Trump presidency is potentially seen as inflationary, but Harris has been sort of making grounds in swing states. So it does set up for an interesting month. But I think the reality of those of a rate cut in the US in the order of probably 25 basis points, as you suggest, and also the ECB likely going again. Inflation's also playing ball across the Atlantic as well. So you look at it was 2.2 in August, down from 2.6% the prime month. That's the lowest since July 2021. So another rate cut there, a rate cut by the US, which I think we've got the Bank of Canada as well coming out this week. So that'll be interesting there. So it could enable us to navigate what is typically a tricky month. I think what might be more also interesting as well, Andrew, is whether we see that rotation that was in evidence continue to play out a bit. I mean, the earnings season was generally okay. We had a few high-profile sort of misses. Nvidia you mentioned. So, yeah, are we going to see more of that? The reality of a soft economic landing may be better for older economy stocks. So, time will tell.
Yeah, interesting you mentioned that rotation. Obviously, that stalled at the beginning of last month. So, interesting to see whether that actually picks up, particularly into those smaller cap stocks. Greg, let's get into what we've seen from local earnings season. Well, in fact, let's start on your side then. What you're seeing there. How's your market actually open this morning?
Yeah, so we're open down around about a third of a percent. So yeah, we after we had a great month in July, we had those RBNZ going on the rate cut, surprising a little bit, which we've talked about, and then last month was sort of pretty flat. So we're pretty much flat now, going back to sort of the start of August, given today's move. But we've had a couple of announcements this morning. So one's pretty interesting. I think it sort of sums things up the way sort of we see the New Zealand economy versus across your way of things doing a little bit better, proving a little bit more resilient. So you've had Michael Hill out for results. Full year revenues up 4%, Australia up 10%, New Zealand down 12%. I think that's pretty much sums up how we sort of see the consumer on this side anyway. And they're saying that the year has started off in a similar vein, that same-store sales up 2.7% in the first 8 weeks. Australia's up 5%, New Zealand's down 6.2%. So you've had that rate cut over here, but there's a lot of challenges still facing consumers, and we're probably going to need a few more before the end of the year to really get some sort of green shoots of confidence going. So Michael shares they're pretty flat, but they're down nearly 40% year to date. We've also had an announcement from Ryman Healthcare, so that's a big retirement care operator here. They're also been very weak this year. Again, very much sort of interwebbed with the housing market, and in terms of residents new residents selling their homes and getting into their retirement homes. So yeah, they've made a few interesting sort of announcements this morning, or tweaks, should I say. So new pricing choices for residents. They said they're going to have a new CEO by the end of this calendar year. That'll be good. They haven't got one at the moment, but they actually are stepping back on their development. So I thought that was really interesting. They're saying, we've had the rate cuts. They don't see any tailwinds coming through from that for at least 6 months. They've effectively got their developments on pause till March 2026. They've got 10 in-flight villages, which they're sort of paying attention to, both in New Zealand and Victoria. But yeah, they're putting things on pause. So I thought that was pretty interesting. But yeah, well received by investors this morning. Shares up a little bit.
Yeah, I mean, you speak about what we're seeing in the building and construction and housing industry, particularly your side, I guess. You're saying the New Zealand consumer is obviously struggling there, and that's reflected in those retail stocks as well. When you look at a company like Fletcher Building, which is more than just New Zealand, it's here, it's got a presence, a global presence there. What's the outlook? Given obviously that industry has been under pressure.
Oh, and they've had more than their fair share of challenges, and we could spend a long time just talking about that. But the good news is they've got a CEO now. They're still looking for a chairman. So, that'll be interesting. They had a little bit of progress announced on Friday with the piping issue they've got in Western Australia. So remember, this is around about 15,000 homes. There's been leaks. They've come to an agreement with the Western Australian government that they're going to cover 80% of those costs. It's going to cost them around about $155 million. Now, the interesting thing about that, I thought, is that they've all still maintained it's a installation rather than a product issue. So I'm not quite sure why they're covering 80% of the direct costs. So I think a few are sort of asking that question. It's also not capped. There's also sort of no time limit. So this story could keep on giving. And the bigger thing, I suppose, as well, is that BGC, which is a local construction firm over there, they aren't included in this agreement. And they cover 50 to 60% of these affected homes, which were constructed from sort of 2017 onwards. So they're still suing Fletcher's subsidiary IPLEX. So, yeah, there's been a partial resolution, and Fletcher shares had a good move on Friday. They're up sort of 7%, but there looks like there's a ways to go here, and there could be further sort of liabilities on that front. But there was another positive actually. We did have sort of in relation to Fletcher's and also in relation to New Zealand generally, that building consents had a big move upwards in July, so that was good. But then you dig in the detail, and there were I think there were 3 more business days, and there was a big development down there in Queenstown. So it might be just a sort of a one-off, but we'll be hoping for a turnaround there. But I think the reality is, you look at those cyclical industries, it's going to take a few more rate cuts and so on for that to sort of filter through.
Greg, terrific stuff. Great to get a view of what's going on your side, but also this side as well. Thanks for joining us from Devon Funds Management. Enjoy your week.
You too. Have a good day.
Let's just take a quick look at where we're likely to open. Looking for about a negative start, in contrast to what we just heard from Greg there, they're actually opened in Auckland positively. So SPI futures there off just over 0.1%. Stay with us. The open is just a couple of minutes away.